Australian property prices are expected to increase by up to 5% in 2024, according to the PropTrack Property Market Outlook report. This follows a 2.7% rise from January to May and a 5.9% increase over the financial year to date. Despite high interest rates and increased stock for sale, buyer demand remains robust, driven by strong net migration and low supply. Market dynamics. PropTrack's Cameron Kushner notes that the upcoming Stage 3 tax cuts and potential interest rate cuts may further boost demand, while new dwelling commencements and completions remain low. Fitch Ratings and other analysts, including CoreLogic and AMP, support these findings, expecting home prices to grow by 4 to 6% in 2024 and more modestly by 3 to 5% in 2025. ANZ Bank forecasts a 6 to 7% price growth in capital cities, especially Perth, Brisbane, and Adelaide. City-specific trends. Perth, expected to lead with home price growth of 8 to 11% in 2025, following an 18.9% rise in FYTD. Melbourne, lagging with a 0.8% increase in FYTD due to higher property construction balancing supply and demand, despite population growth. Brisbane and Sydney, forecasted to see 3 to 6% growth in FY25. Adelaide, predicted to grow by 5 to 8% in FY25 after a 12.9% rise in FYTD. Inflation and interest rates. The monthly Consumer Price Index, CPI, rose 4% in the year to May, with housing costs contributing significantly. Rent inflation remained high at 7.4%, and new dwelling purchase costs stayed steady at 4.9%. Energy, education, healthcare, and other services costs remain elevated. Interest rate outlook. The Reserve Bank of Australia faces pressure to hike interest rates due to stronger than expected inflation data. ANZ Bank and NAB have adjusted their forecasts, now expecting the first rate cuts in 2025 instead of late 2024. Deutsche Bank and Beta shares suggest the RBA might increase rates by 25 basis points in August, with financial markets reflecting a higher probability of a rate hike by September. Overall, Australia's property market continues to defy economic headwinds, with strong demand and limited supply driving price growth, while inflationary pressures influence interest rate policies.